That's the real money, or real money for wealth preservation, gold. But right now, we definitely see an opportunity with silver because we have over certain periods told our clients don't hold silver because it's too volatile, you won't sleep at night. But right now, the ratio has now topped recently at 100, coming off quickly by almost 10%, the gold silver ratio, gold divided by silver. And that's a measure of when the metals start accelerating, that when the gold silver ratio comes down and silver goes up faster than gold, that's when you're entering the acceleration phase. And that is normally led by silver. And I think that's what we're going to see now too. Silver has now moved up to $36. 35 was a bit of a critical resistance. I think we'll move quickly above $50, $60, $70 very quickly. And again, I'm not a speculator. I'm a long-term wealth preservationist. But I think silver is now an opportunity. But hold more gold than silver. But this is an opportunity because silver is also, they say the poor man's money. You talk about tokenization. Silver is ideal for tokenization because if you have 100% proper operators with 100% backing of the metal, that is an inexpensive way of distributing physical silver to a bigger public, which cannot afford to go or find it difficult to go in and buy one silver coin at a time, maybe. So I think silver is, but physical silver, of course, that's what we do. We don't do token gold or silver. But now hold some silver too, because that's going to an interesting ride. And I think silver will go up manyfold. And I stopped giving forecasts in any currency or any metal at all, because for the simple reason that it's meaningless. Because if you tell them a number in $10,000, $50,000, whatever, what's the dollar worth at the time? That's or the euro, whatever. That's really what counts. So just having putting a dollar value on something, measuring it in money that goes down by the day is meaningless. So therefore, I know that the metals are going to appreciate substantially more than inflation, and that's enough. You don't actually need to have a target by end of the year, whatever it is. It's useless to have that. But the multiples is going to be what's going to happen, measured in paper money. Sorry, I just wanted to mention silver because it's important to understand also silver is now interesting. The problem is that you cannot get rid of debt. You can cancel debt, but if that debt is backed hundreds of trillions of assets, if you put the debt aside, those assets are going to lose the same percentage of their value as the debt does. And therefore, because the debt was backing all of those assets in an incredibly leveraged fashion.
Right.
And therefore, there'll be an implosion of assets. And we know we have bubble assets today. You take central bank gold. Total central bank gold in the world is about 36,000 tons, not a lot. And the value of that is just a bit over $3.5 trillion. The value of Microsoft is $3.5 trillion. And that shows you one US corporation is worth as much as all the central bank gold in the world that is backing the monetary system. Then you realize that something is wrong in relative values in the world. And then you realize that gold needs to be revalued by multiples to adjust for this total incorrect ratio between bubble assets and real money. And that's going to happen. We're in the midst of it, since we started in 2002 at $300, advising our clients to go into physical, and then we set up the system, doing it outside the banking system, and helping them buying, storing it in their name, etc., in Switzerland and Singapore, since then that was $300. Now we are 3,300, so we're up 11 times. Some other currencies were up more, but this is just the beginning. I'm not a gold bug at all, as you know. We just went into gold because I saw the risks in the world. I've always been interested in risk and protecting the downside against the risk that I see. And I saw with the debt growing and during Greenspan's time, etc., and in the 90s, I said that this is going to end badly, like it always has in history,
Right.
without fail. Every single monetary system has gone to zero. So it was pretty easy, and and we are, that's why when we started this discussion, it's so fascinating to be watching this because it's happening. It's not, for us in the middle of it. It's in slow motion. When you read about it afterwards in history, say the gold went up 10 times in 25 years. I mean, there's nothing, of course, but we are going to see, as I said, we are going to see it going up by multiple. And this is why we're back to what you and I are passionate about, and that's helping people to preserve wealth. A lot of people, will have a massive inflow into gold, of course, but it's only going to be marginal in relation to the total global financial assets because the gold market can't take it anyway. But if we go from 0.5% of world financial assets into gold to 1 or 1.5 or 2%, that will mean a massive increase in the value of gold, and it cannot be satisfied, this demand, as we know, by producing more gold, because we can't produce more than 3,500 tons from the mines every year. So it can only be satisfied by much higher prices. That's not a dream, that's reality, because we know that, and the central banks are gradually moving their reserve assets from dollars to gold. They're not going to do it overnight. They're not going to put pressure, too much upward pressure on the price. They're going to do it slowly, and that's a move that's going to make gold go up by multiples, Lynette. This bar in 1971 cost $14,000. $14,000. It's 400 ounces, 12 kilos. And that was when gold was $35 an ounce, before Nixon closed the gold window. Now, today, that bar is worth just under $1.4 million. So that's up almost 100 times since 1971. And as we try to explain and keep telling investors, gold isn't going up at all. It's the value of your money that's going down, and nobody understands that. And the government doesn't want to tell you that because it does show their absolutely useless management of the economy. If they say, well, sorry, the value of your money is going down in your pocket. As Nixon said, the value of your dollar is still going to be the same after. Say that there was a technical adjustment of COMEX stocks. I mean, there was a massive shortage there, and they had to balance that. I don't think it was a fundamental switch at all of gold to the US. And we don't see investors moving from Europe or from Singapore or from Dubai or to the US with their gold. If you look at now, if you talk to, for example, the Swiss banks,
Hmm.
there's a massive inflow of American money. American wealthy investors want to move their money to Europe. No one of a sane mind is going to move money back into the US. The flow should go the other way. I agree with that. There is no safe situation in the world anymore, as there was, because of the geopolitical situation and of course of the economic situation. There is just not a safe place. Nevertheless, I would prefer any day Switzerland, having my gold or my money in Switzerland, as opposed to the US. I am quite convinced with the finances of the US and the debt and the escalating debt, or the exponentially growing debt in the US, that there has to be capital controls in the US. Because the dollar will be affected, and just like in Nixon's days, and that they cannot allow the dollar is only down, or the dollar index only down 10% this year. Now, that's a start. It's going to go a lot lower. It never goes in a straight line, of course, but